All right, the big story that we're tracking right now, Prime Minister Modi has concluded his Singapore leg of the two-nation tour. Remember, he first was in Brunei, then in Singapore. On your screens are some of those images that had come in earlier, where Prime Minister Modi was at the roundtable meeting with business leaders, along with Singapore companies who've committed an investment of close to $60 billion over the course of next few years. There are also key MOUs that have been signed between India and Singapore, essentially an extension of the Act East policy of the Prime Minister and his government. Latest update coming in from Morgan Stanley. In fact, reports suggest, and Morgan Stanley has said, that the MSCI Emerging Markets Index could potentially see India surpassing China. Now, this is an index where there are emerging markets which are given weightage depending upon a whole host of factors, and Morgan Stanley has said that the weightage that has been given to India till now is now going to increase. Now, what does that mean? It means that there is a complete reaffirmation as far as the India growth story is concerned. It suggests that the trajectory that India is set to take in terms of its growth and investment outlook looks much better, and in fact best as far as emerging markets is concerned. And most importantly, the equities rallied today, and it also is a thumbs up that there is a lot more lined up as far as the Indian economy is concerned. And to talk on that and a lot more as far as what does it mean in terms of the big picture outlook, let's get in Swaroop Gupta as well as Abhinav Mishra joining me on the broadcast. Thank you so much, gentlemen, for taking out the time and speaking to me on NDTV World. Let me start with you, Mr. Mishra, which is that this update that has come in from Morgan Stanley, the fact that India could have a higher weightage than China, is essentially a reaffirmation of the Indian economy. It's also coming at a time when there have been multiple upgrades, whether it's the World Bank or the IMF, both suggesting an upgrade as far as the Indian economy outlook is concerned. And then, of course, also the fact that the Indian equity markets are also doing much better than others.
Thank you, Gauri, for inviting me. I think definitely it has been nothing new that India has been on a growing trajectory for the past decade. In the recent years, though, with the significant investments that we have seen across technology, infrastructure, and now also in manufacturing, the growth in both capital markets and the broader economy has been significant. And what we are anticipating is that the overall FDI into India will grow anywhere from what we see at about $80 billion today to about $100 billion within the next 5 years. And definitely, while India, to be honest, has not yet crossed China, and that will take some time on the MSCI index and such indices, but then historically, the weightage of India used to be under 10%, which is now inching towards equal weight with China. So right now, I think we are already about 19% in MSCI with the change that happened recently in August. Whereas China now has been pulled down from about 39% to close to 24%. So that definitely shows that the world is looking at India, and a lot of investments and foreign capital is there to stay with India and contribute to its growth as well.
Indeed, and most importantly, you're right about the fact that we've jumped from 9% to 19.8, a little under 20%. This growth has actually come in about 3.5 years. So we were 9.2% at the end of 2020, and at the end of August 2024, we are just a little bit under 20%. So this is the growth that India has seen in about 3.5 years, which is why it's significant and remarkable, and also coming at a time when the Chinese economy continues to face headwinds. Mr. Gupta, weigh in here in terms of the larger impact and how this is set to put India in terms of a higher trajectory when it comes to fund inflows that it could attract.
Thanks, Gauri. To start off with, it's very important to underline the fact that this is as much China's misfortunes that we are seeing in play as much as India's growing presence and importance as far as global capital markets are concerned. As you can see, China's economic indicators remain extremely weak. All stops have been pulled out by authorities and the governments in power there in order to boost local self-government debt, the flailing property sector, and so on and so forth. But frankly, Chinese investors themselves, including retail investors, have been rotating out of those markets into other markets. And there's no brighter spot than India in this particular region. We've kept growth buoyant. Maybe the IU expects it to be a shade under 7%, in the current year. And of course, fiscal deficit remains on target to go below 5%, even though the fiscal deficit target for this particular year has been reduced. So it's a combination of various factors, very strong economic fundamentals, a very high free float, strong buoyancy among retail investors, and earnings results which have remained buoyant. So it's a combination of factors at play that have led to this particular situation coming into place. And of course, despite the near-term corrections that's happening, it's highly likely that the bull run that Indian markets are experiencing, and several other firms and agencies have weighed in on this. It's just it's still going on. It's just getting started. It's perhaps not peaked yet. So there's every reason for FIIs to crowd in. The importance of FIIs was reducing,
Yes.
Over the years, past 12 years. That importance has gone down, but, they still account for a substantial amount, and they provide a firm basis, especially to the downside of the market. So it's nice to see, it's great to see, more
Absolutely.
inflows.
Absolutely. And just 30 seconds to tell our viewers right now that, when you simplify this, what does it mean and why does it impact viewers watching this, which is that the GDP growth rate is one aspect of the economy doing well. The other aspect, what Morgan Stanley has been talking and said today, is how more and more investors want to pump in money into India, because as an emerging market destination, it now looks more primed to get larger fund flows than what it did earlier, which is why the weightage in the index has gone up. Now, a lot of investors don't go about investing directly into a country. They do so through the MSCI index as well, which is why this is so important. And if fund flows increase, it means access to capital, access to more funding for companies, and that starts another cycle of expansion. Now, Abhinav Mishra, a lot of investors do seem to think that maybe the markets in India, they've had a great bull run this year, but are they headed for a correction? That was a question being asked before Morgan Stanley came out with this report. So clearly, those naysayers or those skeptics seem to have got their answer already. There's a lot more in the Indian equity markets right now.
Absolutely, and I'm not denying that the valuations have been increasing recently, but the truth also is that India has shown resilience in the way its economy is operating, but also of late in the capital markets, and not only the foreign flows, the domestic flows have been increasing steadily. And what that means is
any sectors that you think would probably attract disproportionately higher fund flows given this change in commentary and change in weightage?
Indeed. So I think the services has always been a player, and I think with the advent of the focus on data, AI, and semiconductors, both IT services and technology-related R&D would still be sectors of focus. However, going forward, we are seeing a lot of capital flows would come to green energy and infrastructure space as well. India, as a booming economy, will continue to need significant investment in both infrastructure and to really reap the benefits of its demographic dividend.
Yes.
We will need to create a lot of jobs, and those jobs would largely come from the manufacturing and the boom in manufacturing sector.
Absolutely.
And the government has been focusing a lot in that space.
Absolutely. Quick closing comments, Swaroop Gupta, sectors that you think would benefit the most?
I tend to agree when infrastructure is called out, but there are other sectors which look defensive but might be good place going forward. Pharmaceuticals, for one can never undermine the importance of that sector. And I'd also like to pick out defense stocks. I know they're very small at this point, but FI is probably going to be entrenched for the longer term, and therefore those prospects will increase going forward.
All right, I would probably pick the consumer growth story as well, because India is a very large consumption story. So my vote would probably go for that. But thank you so much, gentlemen, for speaking to me on a story that we're going to keep revisiting as we talk more and more about the India growth story.